But for all of you that have been affected by this, I'm praying for each and every one of you. The alternative may result in millions of people without housing struggling to find somewhere else to live. Hey everyone, Eric here, thanks for tuning in. Will I be evicted if I can't make rent? Is the housing market going to crash? Is there a housing bubble? Is Congress going to come to an agreement and pay me my $600 per week? Seeing that the cost of real estate is extremely expensive at the moment, and as of Saturday, landlords now have the right to actually evict their tenants or at least give them a 30-day notice, I feel like right now is an incredibly important time to address all of these topics. Over 30% of tenants did not make their full rent payments in July. In addition, over 8% of homeowners are currently in forbearance, which is another way of saying that lenders and borrowers have agreed to delay the foreclosure process. Thus, those individuals are way behind on their rent payments and are doing everything they can to prevent themselves from losing their housing. Landlords, on the other hand, may be facing the difficult decision to either allow their tenants to live there rent-free for an unspecified amount of time, or kicking them to the curb to fill the space with somebody that is able to actually make rent payments. However, the price of real estate has miraculously not fallen. In fact, the opposite is actually happening. This may seem a little bit odd considering we are in the middle of a recession, as well as 2020 being such a difficult year. Since interest rates are at all-time lows and buyer confidence is relatively high, real estate prices have actually continued to go up. There are less people selling their houses at the moment due to the virus, as well as a variety of other different factors. However, there are still plenty of buyers on the market. This pits buyers against one another and essentially prompts them to outbid each other. As a result, the price of real estate continues to be high. To use my experience as an example, I am currently looking to purchase my first investment property within the next 6 months. I have noticed that new listings are flying off of the shelves very rapidly. For example, there are a few properties that I had scouted out that seemed to check off my criteria. These properties had only been on the MLS for a few days. By the way, the MLS stands for the Multiple Listing Service and is essentially a place where real estate agents are able to look at properties prior to the ordinary consumer. I was super excited to go check out these properties, but then realized that my agent had actually messaged me saying that they had received multiple offers already. My agent also told me that one of those offers were probably going to be accepted within the next day, so for me, it didn't really make sense to go ahead and go look at it. This leads me to believe that we are in a seller's market, which essentially describes the leverage that sellers have when there's a ton of buyers coming and making offers on their properties. So what exactly is happening in the real estate market, and should you be concerned? In this video, I'm going to be covering exactly what is affecting housing prices and why they are so high, when the housing market may take a dip and by how much, and the end of your $600 per week stimulus check, as well as the end of the federal eviction ban. My hope is that the information that I'm sharing with you is relevant to current homeowners, renters, as well as real estate investors. Also, shout out to Dash Cabahug for actually recommending that I cover this topic via Instagram. Feel free to comment what you would like to see me cover in the next post as well. Before I get started, please make sure to subscribe to my YouTube channel if you haven't already, and feel free to give this video a big thumbs up if I provided you any value. It really helps me out, guys. Thank you. And make sure to turn on notifications so that you're alerted every time that I post a video. Having said that, let's get started. The first thing that is affecting housing prices and keeping them so high is the low interest rates. These interest rates are currently at all-time lows, and there's no indication from the Federal Reserve that they're going to be raised until after 2022. According to Freddie Mac, the average fixed 30-year mortgage is hovering around 3%. To give you some context on the history of interest rates, the average fixed 30-year mortgage was over 16% in the late 70s and has steadily come down ever since then. So let's say that you wanted to buy a $500,000 house and you put 20% down, or $100,000. This means that you would have to borrow $400,000 from the lender. Let's also assume that you were approved for a 3% interest rate on a 30-year fixed loan. After 30 years, you would have paid slightly over $107,000 in interest. Now this may seem like you are paying a lot just to borrow money. Just 12 years ago in 2008, the average interest rate was more than double our current interest rate at 6.4%. So if you're in a position to buy a house within the next 12 to 18 months, I highly recommend checking it out. So why exactly are interest rates so low at the moment? Well, the simple answer is that the Fed lowered interest rates in order to incentivize Americans to continue spending money. Since unemployment rates are so high at the moment and the future is relatively uncertain, people have been stockpiling their money just in case an emergency happens, like they lose their job. Most people would rather just have a little bit of cash on hand just in case. Although this may be good for you personally, this is actually really bad for the economy. The economy relies on consumer spending in order for it to keep growing. Think of it like putting gas in your car. Without that fuel, your car won't make it very far. The same can be said about the economy. Without consumer spending, the gears of the economy will slowly grind to a halt. The Fed hopes by having such low interest rates, people will feel like it's a great time to borrow money since it's so cheap. If their plan succeeds, consumer spending would help lessen the economic impact of the virus. It would also help small businesses stay afloat, which is the backbone of the American economy. The next thing that's affecting housing prices is that there is simply less inventory than there is demand. Like I had said previously, people are looking to take advantage of these low interest rates, which is why houses are being bought so quickly. However, homeowners are very hesitant to sell their properties at the moment due to the virus and some other events that have transpired in the past. Not only that, but the election is just around the corner, which I can imagine is going to be quite the spectacle. In other words, these owners would rather hold on to their properties and wait until the storm passes before they sell them. According to FRED, or the Federal Reserve Economic Data, since 2010, the monthly supply of houses has slowly declined and is currently at one of its lowest points this decade. In the coming months, we are going to see if this low inventory is going to help drive prices even higher, or if buyers are just going to get fed up with the cost of real estate and prefer to rent. Rent has been going down nationwide, especially in big cities like San Francisco, Boston, or New York. So it would make sense that many people would rather just move into a rental than actually purchase real estate at the moment. The next question I'm going to address is whether or not there is a housing bubble, and if there is one, when it will pop, and how much will real estate prices be affected as a result. Now take a look at this graph really quick. The blue line measures housing prices, yellow measures average hourly earnings, gray measures rents, and the orange measures CPI, or Consumer Price Index, which is commonly known as an accurate measurement of inflation. Prior to the 2008 housing crisis, you'll notice that housing prices increased much more rapidly than the other metrics shown. When that bubble popped, housing prices fell a staggering 43% of their value over 4 years. Now the same pattern is actually happening today. Real estate is ridiculously expensive, and inflation has remained constant at about 2 to 3% annually. If there really is a housing bubble and it pops, then we may see real estate properties lose 30% of their value. Sounds pretty drastic, doesn't it? Please note that the financial crisis of 2008 is a lot different than what we are currently experiencing in our market today. There were a lot of unethical practices being conducted by Wall Street bankers, like lending money to people that they knew would never ever be able to pay them back. Check out The Big Short or Panic: The Untold Story of the 2008 Financial Crisis for more information about this crisis. Everybody just assumed that housing prices were going to continue to skyrocket, so people got greedy and the world economy collapsed as a result. Those are two of some of my favorite movies, and I'm sure that you'll enjoy them also, but then again, I am a finance dweeb. Because our situation is so much different than that of the financial crisis of 2008, I don't think that real estate is going to suffer as dramatically. However, I do believe that there's going to be some form of correction, just like there was in the stock market. Now, I'm not able to predict the future, but what I do believe is going to happen is that the housing market will lose a portion of its value over the next 12 to 18 months. Now, make sure to do your own research on this topic. I am just a random guy on YouTube giving you some information and some of my thoughts. Alright, so now that we understand what is affecting real estate prices and whether or not there's a housing bubble, let's go ahead and talk about what's probably most important to you, which are the stimulus checks as well as the federal eviction ban. The extra $600 per week that you may have been receiving on top of unemployment has just expired. However, there are a few things that Congress has proposed in order to help Americans. It is likely that the government is going to be sending you a $1,200 stimulus check, but it is still unclear who is eligible for this check. Some Republican lawmakers have proposed reducing the weekly checks from $600 to $200. I've also read that unemployment benefits may be increased to 70% of an employee's previous salary. However, this unemployment benefit would take the place of the $600 per week that you have been receiving. On Sunday morning, White House officials and Republicans took the necessary steps to finalize a bill that would offer $1,200 checks to many Americans and that would not renew the full unemployment insurance enhancement. However, regardless of the new stimulus bill, make sure that you are prepared for any scenario. Don't just rely on the government to save you financially. Republicans will likely reveal their proposal for the next stimulus legislation within the next week or so. The stimulus package was actually initially delayed because Democrats and Republicans couldn't come to an agreement on the terms of the new stimulus bill and the length of the extension. It is unlikely that Republicans will agree to continue these $600 per week stimulus payouts because it is seen as a disincentive for people to go out and actually find a job. And I have to kind of agree with the Republicans on this one, although I'm more of a moderate myself. It didn't make sense to me that a lot of people were actually making more money not working than when they had been. This may have been an error on Congress's part, but I still think that some form of aid is absolutely still necessary. Next up, we've got the federal eviction ban that was just lifted last Saturday. This ban protected renters from being evicted from their properties over the past few months. Because this ban has just been lifted, landlords are now legally able to evict their tenants. Housing advocates say they expect a tsunami of evictions if Congress doesn't pass another eviction ban and at least a short-term extension of unemployment relief before the next stimulus bill becomes official. These renters may be forced to negotiate with their landlords to come up with some sort of compromise to prevent them from being kicked out. And even worse yet, this is happening during the middle of a pandemic. This is a really bad situation for both landlords and tenants alike. Landlords may be relying on those payments from their tenants for their livelihood just as much as tenants are relying on stimulus bills to be coming in to actually pay those bills. Now don't panic, the Republicans have mentioned that they are likely going to extend the eviction ban, but only time will tell what that will entail. Apparently some landlords have filed for evictions prior to the end of this ban, and some states have simply not even and enforce the rule. If you live in a property covered by the CARES Act, the soonest landlords could actually ask you to leave was on Saturday, and the soonest that they can actually file an eviction to force you to leave is August 24th. We will not know for sure if this federal eviction ban will be extended until after Congress passes their new bill. But for all of you that have been affected by this, I'm praying for each and every one of you. The alternative may result in millions of people without housing struggling to find somewhere else to live. This is obviously a very dire situation. For those of you who are still employed, I would highly recommend saving up as much money as you possibly can at the moment, because I really think that things are going to get worse before they get better. If you are no longer employed, there are actually quite a few companies that are still hiring, so I would leverage your existing LinkedIn connections to go ahead and find yourself a new job. And please don't just click on automatic applications. At least in my experience, I have found that emailing recruiters directly will net you better results. Use the extra time that you have right now to develop new skills, maybe start a side business, or just focus on your mental health. This is a very rough time for everybody, but I promise you that we as a nation are going to come out of this okay. Be safe and everybody wear your mask. And that's it. I hope I give you all the information that you'll need in order to plan accordingly, especially if Congress lags on this new stimulus bill. Please make sure to subscribe to my YouTube channel to join the Millypreneur community and give this video a thumbs up. Also, I just changed my blog URL from millypreneur.blog to themillypreneur.com. So go ahead and check that out as well, and feel free to follow me on Instagram at Eric_Anthony_Lopez. Thanks again for watching, and I'll see you on the next post.